Hi everyone, welcome back to Corporate Decoder, the place where we take a peek behind the curtains of the business world. Today we're diving into 3D Systems' latest annual report, and trust me, it's a roller coaster. We're talking about a company that's literally building the future one 3D printed layer at a time, and their financial journey has some serious ups and downs. 3D Systems is a company that makes 3D printers, materials, and software. They aren't your home inkjet printer kind of setup, but instead sell big complex machines to manufacture things for healthcare and industrial applications. Think printing medical implants or aerospace parts. They have been around for over 35 years and operate worldwide. This annual report covers their performance for the year 2024. Let's dig in. The company partners with customers and believes its additive manufacturing can help solve a number of designer manufacturing challenges. They want to help customers adopt and scale 3D printing in their factories. They think they have the scale and all the technologies needed, including hardware, materials, and software. Now, this is where things get interesting. 3D Systems is betting big on regenerative medicine, including the use of 3D printing for human organ transplants. They are focused on research and development here. Organ failure kills millions every year, but 3D Systems hopes to someday 3D print lungs and other organs for transplant. It's a long-term, high-risk, high-reward kind of play. They are also working on organs on chips, basically small 3D printed organs that drug companies can use to test new drugs. This could make drug development faster and cheaper. However, they are currently reviewing what to do strategically with this part of the business. The company offers 3D printers, materials, software, and digital design tools. They use different printing technologies that are best with different materials like plastic, metal, and wax. They try to work closely with customers to optimize these materials in their factories. But hold on, there is a twist. In December, 3D Systems decided to sell its Geomagic software business to Hexagon for $123 million. This isn't a shift away from software, rather focusing on software directly related to their printing technologies. Now, some housekeeping details and a few disclaimers, including that they are an accelerated filer, which means they are a mid-sized company that is up to date with SEC filings. The total market value of their stock held by non-company insiders back in June was about 397 million shares. Also, in March of this year, they had about 135.5 million shares of common stock outstanding. Here's a quick rundown of what we'll be covering. We'll go over their business, the risks they face, some key financial numbers, and a few other interesting tidbits. First, revenue. The total revenue has decreased in 2024, landing at $440 million compared to $488 million the prior year. It seems they lost some sales along the way. The next important number we need to look at is gross profit. This is how much they made after subtracting the cost of manufacturing the 3D printers. It decreased to $164 million compared to $196 million, so they are making less money on each sale, a decline of 16%. Selling, general, and administrative expenses stayed roughly the same at around $210 million. But here's where it gets really painful. They recorded $145 million in asset impairment charges. These are write-downs that reflect how much certain assets have declined in value. Now, while this might sound bad, these impairment charges were actually much lower than the year before, when they hit a whopping $302 million. They saw a reversal of some volumetric earnout compensation and benefits, as well as increased audit costs. Companies such as 3D Systems must comply with laws of different countries, exposing them to risks of violating different requirements with heavy penalties. There are risks that their regenerative medicine efforts may result in nominal revenue. Their efforts may lead to disputes with their strategic partners. The company had some legal troubles a couple of years back regarding export laws. In 2023, they settled, but they still have to comply with the terms of the settlement, which includes measures to beef up their export compliance programs. They are at the mercy of their suppliers when procuring parts for printers, as well as chemicals for materials production. If any of those suppliers decide to stop doing business, 3D Systems might have a problem. They also rely on information technology and third-party vendors to support our operations. Their information technology systems and networks face risk of cyber attacks. Their ability to attract, hire, develop, and retain senior management and key employees is critical to the leadership of their business operations. Senior management are the face and brain of the company as such. If there is turbulence, there could be problems. Okay, here's a big one. Because of a delay in filing some of their financial reports, 3D Systems is no longer eligible to use a Forms MES 3 registration statement until December 2025. This could make it harder for them to raise capital or acquire other companies. Their stock is traded on the New York Stock Exchange under the symbol DDO. Looking at the stock performance over the past 5 years, the numbers are not good. An initial $100 investment into 3D Systems in 2019 would only be worth $37 now compared to $150-$40 in NYSE Composite Index. As you can see, their aggressive bets are not paying off, at least not now. What do we make of all this? 3D Systems is a company in transition. They're streamlining their operations, investing in new technologies, and trying to adapt to a changing market. But they also face some serious challenges, including macroeconomic trends, legal compliance, reliance on key customers, and the always present risk of technological disruption. However, their stock performance isn't great, indicating that they are not doing particularly well now. However, the hope is that they will turn it around in the coming year if indeed the financials were a bit of a mixed bag, a decline in revenue and profitability, offset by lower. Their stock performance isn't great, indicating that they are not doing particularly well now. However, the hope is that they will turn it around in the coming year if the financials were a bit of a mixed bag, a decline in revenue and profitability efficiencies. Saptuve, they're making bold bets on future tech like organ printing. It has some serious potential, but also serious risks. Says overall, 3D Systems is still a company that's making a turn for sustainable growth dig us into the world of business and finance. Thanks for watching.